Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Tuesday morning, May 25th, 2021. Thank you so much for joining me today. I really appreciate it. I know you have a lot of other choices, and I want you to know how much I value that you're here with me today. Well, today we're going to talk about the significance of what the market looked like prior to yesterday, after the weekend, and what the market ended up looking like yesterday, and where we're following through in the stock market today. If you're a regular viewer of the channel, you know that we start every day looking at the sectors. And I'm going to repeat it every day so that it becomes a really big part of what you think about every day. We have the overall market. That's the big foundation on the bottom of the pyramid. Above that, then we have the 11 individual sectors. On top of that, industry groups, and then you have the individual stocks. If you could imagine that as a pyramid, the best stocks to buy are the ones that's supported by the three peers underneath it, right? So that's why we dive into both the sectors and the market to start out. Yesterday's sector groups were a little bit less than stellar. Heading into today, that picture changed dramatically. And what's super interesting is the SPY ETF is one good day away from new, fresh, all-time highs. I guess new and fresh is kind of the same thing, but new all-time highs. So think about where we were just a week ago, which is why, and we're going to talk about this today, why you need definitive ways to determine, is the stock and or my market in a potential change of trend or a change of trend? There's a big difference between the two. We actually talked about last week, when you buy stocks, where money goes to die is when you're in that change of trend where you're kind of sideways, you're not in an uptrend, you're not in a downtrend, or maybe there's an existing trend before that, but you kind of go sideways and you keep trying to trade while that's the right price. We're going to point that out using the SPY ETF as an example. However, the big thing we're going to talk about today is SPCE stock and whether or not it's a good time to buy. And more importantly, is a short squeeze underway in AMC stock and SPCE stock. Stick around. We'll be back in just 1 second. Hold on. Okay, now that I have my buttons correctly, we're going to jump right into sector rotation, and then we're going to go right into space stock, SPCE, Virgin Galactic stock, and we're going to talk about whether Virgin Galactic stock is a buy now after it's already rallied. We're also going to talk about a stock that's been upgraded by Goldman Sachs yesterday, had really good price action yesterday, and we're going to look for follow-through because there's still room to go between the existing stock price and the upgraded price from Goldman. And that's a big thing to talk about too. Upgrades happen all the time. Who put out the upgrade is what you really need to pay attention to. And Goldman Sachs, that's a pretty big person. So we're going to head on over. We're going to take a look first at the sector rotation. You know, we start out this every day. Hopefully, I'm helping you develop this as a habit of what you do every single day when you're watching new stocks and looking for ideas. Again, the foundation is the market. The market's one sniff away from all-time highs in the SPY ETF. You can see dramatically how much this changed yesterday coming into the day. After the weekend, there was only one sector that was at the top as far as green last week for the week. That was healthcare. And healthcare had a less than stellar performance yesterday. You can see that over here. But technology and communication services are where we're going to point ourselves out today. These two on the bottom here, energy and basic materials, especially energy, looked like it was perking up a little bit yesterday. I'll point out those stocks to buy today. The stock market is giving us rotation. You really need to be on top of what we're doing right now. Otherwise, you're going to be trading stocks that were strong about a week and a half ago, maybe even a month ago, when you got to be on top of where the smart money, where the deep pockets are putting money now. This column on the right here is the amount of stocks in that sector that meet the strict criteria that I have to be put into the list in the first place. So we go from the market to the sectors to then those good stocks, winning stocks, strong stocks, stocks that have order flow into the game plan for the next day. So you can see here the overall list. What's interesting here, though, still is we don't have any sectors that are green across the board. So what does that mean? What does that mean when you're watching sector rotation and you can't look across the board and say, wow, that's where the money's going. The money is diving into that. I want to piggyback on those deep pockets. Some hedge fund, some bank, big investor, whoever it happens to be, is piling into that sector. It's been going on for a while. Maybe there's a geopolitical reason they're buying those stocks. But right now we don't have that, which is why we watch multiple time frames. We do top-down analysis. We watch the last month, the last week, and the last trading day to start to put the clues together. And remember this, there's no reason to guess, none whatsoever. There's either obvious order flow or there's not. I talk about this all day, every day, especially in our game plan meetings every day at 8:30 in the morning. We review this every single morning. But the point that I want to get across is very clear. How clear that picture is of sector rotation and the amount of stocks within those sectors and the amount of time within those sectors, that should dictate your trade expectation. So in other words, how obvious is it? How long has it been obvious? How many shares should I be trading? How long should I be holding that? What is my position sizing? How much risk am I willing to accept in exchange for the profit potential that's available on that particular trade at that particular time? So right now we're in a little bit more cash flow mode. If the market opens up and we start to see it be green across the board, that means over time, deep pockets are making a bigger commitment. That's what you need to pay attention to if you want to attack the stock market and feel confident, feel conviction, feel like you really know what you're doing. You have to put those pieces together. And hopefully every day I'm giving you clues on how to do that. I'm walking you through the process so you can be the reason, you can be the asset. And by the way, if you haven't done it already, please click down, give us a big thumbs up. I'd really appreciate it. And hit that like button. That really means a lot to me because it lets me know that this is the kind of stuff that you enjoy. And if you have questions, definitely leave a comment below. So going back over to looking at the sectors. So technology and communication services have been the sectors that we've been really now focusing on in the short term. But we're going to go over here first. We're going to talk about Virgin Galactic and whether or not Virgin Galactic is prime for a short squeeze. So I guess what we want to do first we'll take a look at the chart and we'll explain exactly what a short squeeze is. So a short squeeze, and let me actually get this off the screen so we could do this in super clarity, right? I'll come back on the screen. So in order for a short squeeze to happen, there has to be somebody short. I know that sounds silly, right? But short basically means while the stock is going down, investors are betting it's going down. Investors are betting it's going down. So they borrow the stock from their broker dealer. And as they're borrowing it, they're betting that the stock is going to go down. So instead of buying stock and wanting it to go up and you sell higher, you short sell the stock, wanting it to go down, and then you buy it back, which is known as covering the stock. So if there's a lot of people who borrowed stock, and this is a huge part of trading, if short sellers are selling, and supply is going on to the market, and they're betting that it's going to go down, in order for those people to get out of that stock, they have to buy it back. Now, what would make them want or need to buy that stock back? It stops going down. If it starts going down and down and down, you feel confident, like, yeah, I got the right side, it's pushing down. But all of a sudden, if you start to hammer what's called hammering the bid, write that language down, hammering the bid, and it's going down, you're borrowing more stock, it's going down. All of a sudden, you borrow more stock and it stops going down. You're like, uh-oh, you start to panic. You wait a little bit, it starts to go sideways a little bit, and then all of a sudden, you get this one little blip, and then maybe you get a news story, and then you get a, holy crap, I'm screwed. So now you have that position, you needed it to go down, and it wakes up. And then you get a news catalyst. And all of a sudden, this really fast move to the upside, like a rocket ship. No pun intended. Maybe there was. Rocket space, get it? So what happens now is you are short. Again, that's the language. You're short the stock. It rallies, and now you have to get out, or you decide to get out. Maybe you don't have to, but you decide to get out. So now you, as a short seller, have to buy that stock back. And there's a lot of other people because this has been a long-term downtrend, right? Take a look at this. And long-term is obviously relative, but it's going on since it peaked in February. So that's a big price action, 60 down to 15, right? Here's the first piece of news. Second piece of news gets validated. And then you get a 26% move yesterday, 27% move yesterday. So what do you do now? Now you got to get out. But in order for you to get out, this is where a short squeeze comes from. This is where the language of short squeeze comes from. And this is where it's different from just a rally off the bottom. A rally off the bottom typically goes sideways, slowly gets up, gives you a little peak, and then it hits, right? Short squeeze is fast. It's fast because you have to get out. And then all of a sudden, new buyers recognize that it's rallying and they're getting in. So there's two different people that are buying right now. All the people that sold the stock short that now have urgency to get out of this position. All of the smart traders who are recognizing this price action and volume every day, they're now buying. So two different people are buying and buying quickly. Short sellers getting out, new buyers getting in, and that's where you get the move. Now, this is really where the most interesting part of this comes in. Now it's kind of like teetering, and you're like, should I get out? Am I screwed? Do I need to get out? Is this just a blip and it needs to come down? Once the story's over, I'm going to be okay. The move after will tell us. So we had the spike up. If we go sideways, the shorts are screwed because now they're what's known as holding the bid. The new buyers are now not letting the stock go down, and the news and the story that this is bouncing is the reason it's holding. So they're holding the bid. If we go back up and shoot right back down, you have what's known as like a V. You're okay. Generally speaking, if you want to get out, you can get out at a reasonable price. So the next price action is what determines whether or not this is a short squeeze. It has all the makings of it. Spike up, you're screwed. It's kind of teetering. Do I get out? The next price action is what to pay attention to. If it goes sideways, that means they're holding the bid. So if you're short right now, you got to pay attention to that. If you're looking to get long, that's what you're looking to pay attention to, because that means they're holding the bid and there's more legs behind this short-term news story. So that's what it means to be in a short selling situation. That's what it means to stop selling when it goes down. That's what it means when a short seller has to cover or buy back that stock. And then what happens when smart traders start to pile on and hold the bid? The next move, is it going to be a V bottom where it goes back down to where it was, or is it going to go sideways? If it goes sideways and you're a short seller, you better start making your plan right now, which brings us into a different stock that's had a lot of talk right now recently is AMC. AMC has been one of the, what everybody knows as the meme stocks along with GME. You can see it had the spike along with GME. This stock has started to dramatically increase in volume. Again, very hard to let me just, you can see it here. Over the last week or so, volume has started to dramatically increase over what the average is. Yesterday's volume, yesterday's price action was very good. It spiked much, much higher than what it normally does. Now, I want to be clear on this. Just because you hear chatter on the internet, just because you read something on Reddit or whatever else it happens to be, just because it has a short float does not mean the stock is automatically going to go up and have a short squeeze. However, when volume starts to change that equation and it actually starts to move, that's when you start to pay attention. And now that's starting to happen in the stock. Am I saying it's going to be a short squeeze? No. Am I saying that the stock is in play right now? Heck yeah. If it gets over 1450, that's the price action that I'm watching. That's a pretty significant level because now that means it woke up, volume came in, it got to a level where sellers smacked it back down, and now we're looking to head back up past 1450. 1450 and then at least 20 would be the next level that I'd have on the radar as far as my profit target. So watch that level. And especially watch for what we call a fuel candlestick or an energy candlestick, which is a large green candlestick with increased volume. Past that level, that's when it matters. We're also going to talk about Micron today. Micron stock is actually a part of the global chip shortage, but lawmakers actually went to their factory yesterday, and the stock sparked some buying. So we had AMD yesterday, Micron, AMAT. A lot of that industry caught a bid yesterday. And again, get that language down. You sound like a trader at Memorial Day parties this weekend. Go to that party sounding exactly like you're supposed to. Yeah, they were hitting the bid in SPCE until the short sellers came in. They had to cover and get out. You will be the life of the party. Trust me. All right, so that's AMC. Micron Semiconductor stocks picked up a little bit. We're also going to talk about TIGR, TIGR. Let's head on over to that chart right now. Stock has not really been awesome by any stretch of the imagination, but you can see it's actually up 6% today. What we're going to be looking for today is to see, again, using that language, are they going to hold the bid on the gap open today, which is now above this range with the next level being close to 24. So you want to be watching these stocks in play. Speaking of stocks in play, the stock that was upgraded by Goldman yesterday with the $30 price target, it's STEM. You can see it was up almost 11% yesterday, up another 4% pre-market. It's pretty early right now. This is one that should be in your watch list looking for ideas. I'm also going to introduce, kind of give you like a little sneak peek. I just showed you what we do with the sector rotation every day. I'm going to show you the top 5 stocks that are on my radar for this morning to take a look at. Number 1 is ADI. Starting out, you can see why it's right at that breakout level. ALXN, which is what we mentioned yesterday, tight consolidation. ATVI, another stock to be buying today. If it clears this resistance level, we could see is right around 80. Boeing, which has not been in my radar for a while, but you can clearly see here how I'm working the chart. It finally got above that level, and Citigroup just keeps grinding and grinding and grinding higher. The one other thing I want to talk about today, which is a pretty interesting topic, which is profit taking, understanding how to profit take. I make this promise to everybody, and I stand by it. I know we're in a very a situation in the market where you got to really be careful what you're saying. And I promise you that I stand by this comment, that once you go through the process of first understanding what a good idea looks like, which means you just need a little bit of training, the next step is to actually place trades and get comfortable with managing trades. And then the last part is actually understanding how to manage your winners, because managing the losses is actually pretty easy. There's the stop loss, you get out. But here's the promise. The promise for me is if we work together, that within 30 days, the bigger problem, it won't be overwhelmed. The bigger problem you'll have, which is a good problem, is understanding that you need to learn how to hold your winners. And that's really one of the biggest things that we talked about in our coaching program yesterday. So I want to introduce you to our program. If you want to get involved, you want to get everything sent to your phone, you want to join our 12 coaching calls, our 20 game plan meetings every day, click the link below the video and at least learn about the boot camp, learn what it's all about. It's only a $295 investment for 30 days. It's basically a 30-day seminar, real-time interaction with me, plus you get my course. But the point I want to make is this, and I want to be very clear. Taking losses should be the easiest part of trading. They stink, they suck, nobody wants to take losses, but you have to acknowledge they're a part of trading. It's the other side of the equation. That's where you become profitable. Discipline, discipline, discipline. Like everybody hears about discipline, but you need discipline on both sides, not just taking losses. You need discipline to hold the winners. So I'm going to challenge you right now. Leave a comment, however you want to do it. Tell me what your biggest challenge is in trading right now. What's your biggest frustration? If it's what to look at, you're overwhelmed, so you need some structure. If it's holding your winning trades, then you need to learn and have a strategic way of saying, I'm staying in this position until this happens, so that you have some bigger winners that pays for all of those annoying losses. That's what we do together. So click that link below the video. I'd love to see you on the other side. At the very least, take a look and see what it's all about. Thank you so much for joining me today. I really appreciate it. Be awesome today. Do more than you ever thought you could possibly do in the markets. And let's have an awesome day together. And click down and subscribe. I'd really appreciate it. Thank you so much, everybody.